Hey everyone, I'm Liza of lizaonlinebookkeeping.com, and let me welcome you all to this topic that we will be discussing today. This is part of accounting basics. So we will cover here what is accounting, the need for accounting information, the types of business entities, and the users of financial statements. So let us begin with what is accounting. So, accounting is commonly known as the language of business because it is a tool in which the information about an entity is communicated to its users. So, how would it be communicated to the users? This is through the financial information which is in the financial statements of the business. So, the end product of the reports in accounting is the financial statements. So, as a simple illustration, in order for us to understand what is accounting. For example, you opened a bake shop, right? So you invested your personal money, your personal savings to the company worth, let's say, $50,000. So from that $50,000, uh, you bought so many things like uh, your oven, your materials for cooking, for baking, etc., etc. So after a month, you would want to know how much you made, or how much your bakery made, or how much money you have. So all of this, you will not be able to determine if you will not be recording all your business transactions. So if you have recorded every bit, every transactions that you made, we can determine uh, how much is your money on hand, how much is how much uh, how much bakery goods or have you sold, how much money you made, and how much income you made. So from this, it is very important for a business to have financial records. So from the onset, you have to accurately record all your business transactions. So let us take a look at the definition of accounting by an accounting body, which is the AICPA, the American Institute of Certified Public Accountants. They define accounting as the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which are in part at least of a financial character, and interpreting the results thereof. So let us dissect their definition of accounting. It is said to be that accounting is an art. It is said as an art because it requires the use of skills and creative judgment. So, a bookkeeper and an accountant are trained in this discipline in order for them to function, uh, to, to perform their accounting function. Accounting is also considered a science, but it is because it is a body of knowledge, but accounting is not an exact science because uh, the standard setting bodies have constant are constantly changing the rules and principles in order in order for them to update these rules and principles to the changing times. So accounting involves phases. So from this definition, we can see that there are four phases of accounting. So these are recording, classifying, summarizing, and interpreting. So the recording part, it involves the writing down or the keeping of all your records uh, pertaining to your business transactions. Classifying involves the grouping together of similar items. Uh, Summarizing is when you uh, when you put together all these things into a financial statements. Example is your income statement, balance sheet, and statement of cash flows. Interpreting refers to that part which in which the financial information uh, can be understood and interpreted. For example, that the data in the financial reports have useful meaning to the users. So another thing that we consider is that the transactions and events have financial characters. So in other words, they should have a financial value. For example, if you hire someone, that moment there is no quantitative information, only a qualitative information that you hire an employee. But when you pay them salaries, that is the time that you will record this transaction, the payment of their salary, because there is already a financial value. Another thing is to consider is that business transactions are expressed in monetary terms. So example, this only means that the that the transaction will only be processed if it has an assigned amount in the accounting system. So for example, if you paid salaries to your employees in the amount of 15,000, that 15,000 will be entered in the accounting system because it has a monetary value. That is the 15,000. Okay? So next, so we have already discussed the four phases of accounting. Okay, so why is there a need for accounting information? So first of all, uh, let's go to the definition of an accounting body, which is the AICPA again. They defined accounting as a service activity. Its function is to provide quantitative information, primarily financial in nature, about economic entities that is intended to be useful in making economic decisions, in making reasoned choices among alternative courses of action. So, before we go deeper into this definition, let us define what is an entity first. An economic entity is a separate organizations which makes use of its own resources or borrowed resources to achieve its goals and objectives. So, an economic entity can refer to a business entity or a non-profit entity. So, let's go now to the definition. It is said to be a service activity because the the bookkeepers and accountants which are preparing uh, your financial statements and interpreting them is rendering service uh, for their professional know-how or knowledge to your business. So its function is to provide quantitative information, primarily financial in nature. So we have discussed earlier that the financial information must have a financial value uh, or must have a monetary value in order to be processed by the accounting system. And this information will be used by the economic entities uh, for making choices, for making economic decisions. So the main purpose of accounting is to provide, sorry for the typo, for the to provide financial information to the different users to allow them to make rational economic decisions. So what are the types of business entities? So uh, we can divide them into three types. One is service business. If their products are intangible, which means you cannot touch it, like the lawyers, the accountants, bookkeepers, teachers, um, dentists, doctors, they render services to their customers or clients. So you call that service business. Merchandising is when you engage in the buying and selling of goods. Manufacturing is when you transform a raw material into a new product and you sell them. So another form of dividing or determining the business entities, types of business entities is uh, their forms of business organizations. For example, and these are sole proprietorship when it is owned and controlled by only one person, partnership when it is owned by partners who agree to do business. For example, if you are an accountant and your friend is an accountant and you form a partnership. Another is the corporation. It is a legal entity owned by shareholders. Other forms are limited liability companies and cooperatives. So we have been talking about the users of the financial statements. So in accounting, users refers to those parties that are interested in the information about an entity's financial statements. So they are interested in what are in the results of operations or the condition of the business. So one of which are the owners or investors. So they are interested in these financial statements because they want to know if the company is or the business is generating profit, for the investors to know if uh, they will have a return on their investment, or Will there be growth in their investment also? The management is also interested for operational and strategic decisions, like uh, if there are stocks or there are enough stock in the inventory, if it is time to purchase, if it is time to hire or to let go of, of employees, etc., etc. The lenders are, for example, the banks, the lenders, financial institutions are interested with the ability of the company or the business to pay their loans. The suppliers are interested, uh, or the creditors are interested with the ability of the business to settle their obligations, their short term obligations. The government is interested for tax and regulatory purposes. The customers are interested if the company has the ability to stay in business in a long period of time, if and if they can deliver their promises. And the general public are interested for research, for study purposes, for financial news, and to some to appease their curiosity. So that ends our discussion for today. Please download your workbook uh, in order for you to know, to take notes. And I will see you on our next video. Thank you and see you soon.